Hey guys, I am going to work a sample bank reconciliation problem that would look the way it looks on an exam. So I always say I think it's easier to do in real life because in real life you have your checkbook register or the QuickBooks register or what's referred to as the company's ledger. And then you have an actual printout, even if it's on a computer screen, of the bank statement. And your idea is that you are reconciling the two amounts, what the bank statement says your ending balance is with what you, the company, says your ending balance is. But I like to show you the way it is on an exam because we're not actually handing you a bank statement and handing you a company ledger. We're just giving you all the information. So I'm going to work through this problem, but it's really important that you work through this a lot because, as always, it makes sense when I'm talking about it. And you just won't realize the little pitfalls that you're like, oh, is that the book or the bank side? Do I add or subtract that? And so if you do this 2 or 3 times, it'll be really easy for you. You do need to know all the terminology already. So I've got another video with that in it. I'm going to assume you already know that, and we'll just work through this problem. So we have Proctor Manufacturing Company. Their accounting records reported a cash balance of $19,225. So I call that the book balance, or you could say the company balance. But picture their checkbook register or their QuickBooks ledger or whatever they're using. So $19,225. But the balance of cash in the bank at the end of November is only $735. So I think it's important to kind of picture in your head the bank statement and know that the bottom of that statement at the end of November, the bank reported, hey, as of this day, at this time, the statement was printed out. We show that you had $735 in our account. So the owner of Proctor is concerned and says, whoa, why does the bank only report $735 when I show we have close to $20,000? He asked the company's accountant to reconcile them. So here's the information that you're given. It tells you that there's an NSF check for $52.78. You know that means non-sufficient funds. And we've talked about in this class, we will only look at NSF checks from the point of view that a customer wrote the company the hot check. Where of course a company can write a hot check as well. But in this chapter, in this class, we're going to always assume that an NSF check was written by the customer to the company. So you say, okay, which side does that affect? Does that affect my book balance or my bank balance? Well, I think it's helpful to look backwards and see what happened when the customer originally wrote us this check for $52.78. Well, originally when they wrote it, we increased the amount that we thought we had on our QuickBooks ledger or in our checkbook register. We said, yay, we have $5,278 more now. So now that we open the bank statement and realize that that was a hot check, it wasn't any good, we need to decrease what we thought we had by that. So it's going to go here as a decrease to the book side. It won't affect what's in the bank because it never got there. The customer didn't have the money to cover the check. So it never actually went into your bank. You deposited it, but the bank called the customer's bank and said, hey, we need $52.78 from this customer. And the customer's bank said, haha, they don't have it. Good luck. So we don't have to affect anything there. Deposits outstanding. So again, I think it's helpful to remember when you, the owner of Proctor Manufacturing, first made this deposit, what did you do? Well, you placed the money physically in the bank. And when you made the deposit, you also increased on your records. You wrote down in your checkbook that, oh, yay, we got another $76.92 here. So you don't need to adjust your book balance at the end of the month because when you made that deposit, you already recorded that. That's included in this amount. But because it says it's outstanding, it means as of the time the bank statement was printed, the bank did not have this deposit yet. So if you drive by a bank and you'll see, even online, you'll see it online or in drive-through or in their bank teller, it'll say, hey, after 3 o'clock or whatever time, any deposits made will be credited to the account the next day. So if it says outstanding, what must have happened is you, the business owner, really made the deposit, but you made it after the bank statement was printed out. So we need to add that amount to what our bank statement shows we had in there. Checks outstanding. Again, that outstanding word means we really already wrote the check and we already recorded it. So we don't need to adjust what we show on our book side. It just means that whomever we wrote the check to has not presented it to cash it yet. So the bank has no idea we wrote that check. Say this is just one check for $489. When we wrote it, we reduced our cash on our records by $489. But as of the time the bank mailed the statement out, whomever we wrote the check to hasn't cashed it. So the bank has no idea that we wrote it. So this would reduce the amount that the bank says you have in there. Service fees. If you sign up for some sort of bank account that can charge you a service fee, the bank isn't going to call you at the end of the month and say, hey, Jennifer, give me $159. They're not going to invoice me for $159. They're just going to swipe it right out of my account because I've agreed to let them do that with this account. So I don't need to adjust anything in the bank. They've already taken that amount out before sending the statement. I do need to record it on my book side of things, though, to make my records match the bank and say, oh, yeah, the bank took out this service fee. So I think that's everything there. Always read the extra information, which there is some in this problem. It says, in addition, during February, the company's accountant wrote a check to one of its suppliers for $150. The check was recorded correctly in the company's records, but it was processed incorrectly by the bank for $1,500. So with errors, they can occur on the book or the bank side of things. It depends on whose error it is, right? So you have to read these really carefully in the problem. I think it's helpful to kind of picture the actual check. It says the company wrote a check for $150, and it says they recorded it correctly in the company's records. That right there tells me the error is not on the company's side. I don't need to do anything here. We already reduced our records by $150 when we wrote it. But the bank incorrectly processed it for $1,500. It means the bank took out $1,500 of my account when they should have only taken out $150. So the bank took out, I'll say took out $1,350 too much. So I have to call the bank and say, hey, bank, please fix this error. You need to put back that $1,350 in my bank account. And then finally, a petty cash fund was established during the month of November in the amount of $4,500. We know that when you establish a petty cash fund, you're getting the cash from your bank account. So it was withdrawn from the bank account, but it did not ever get recorded on the books. So that tells me I do not need to adjust this bank statement balance. It was withdrawn from there and the bank would have reduced it the second we withdrew it. But since it didn't get recorded on my books, I need to make sure to come over to my books and reduce it here. Ideally, we should have done this when we withdrew the money on the 1st or the 15th or whenever we did it. So this problem tells us that we did not record it, and that's how I knew I had to come here and make the recording. So now that I think I've gone through all my information, I go through here and I add and subtract all of these things. So 19,225, I don't know if you can see that calculator or not, I think you can now, minus 5278 minus 159 minus 4,500 is 9288. And then the bank side of things is 735 plus 7692 minus 489 plus 1350 is 9288. You have to come up with the same thing. This cannot be different. If it's different in real life, you're missing one more thing. You've got to go out and look for whatever it is you're missing. So some tips I will tell you, you need to understand all that and get it, right? But some tips I'll tell you is that, let's see, I didn't write what these were. Our deposits outstanding, I call this deposits in transit sometimes, and our checks outstanding. These are always going to be on the bank side of things, because as soon as we, the company, make a deposit or write a check, we record it. So our ending balance should already reflect that. If it's still outstanding, it just means the bank didn't know about it. So these amounts are always going to occur on the bank side of things. Deposits, of course, are going to add to how much we have, and checks are going to subtract from how much we have. Like I mentioned, errors can be on either person's side. It depends on who made the error. And then these things, for purposes of this class, since I said the NSF will always come from a customer, the company will not have written it, the customer wrote the company. It's always going to happen on the company side of things, as well as the service fee. So maybe just looking at it like that will help you remember it. But the main way to do this is, number one, to know what each of these terms mean, and then just to practice the problem a few times. So I hope that helps.